Hey, welcome. I want you to think about your financial life a little differently today. Don't just see it as a bunch of numbers on a spreadsheet. Think of it as a journey. It's got a beginning, a middle, and an end. And every stage has its own unique twists and turns. So in this explainer, we're going to pull out the map and take a look at that journey together. So just for a second, where are you on that map right now? Are you just starting out, maybe still in school or in your first job? Or are you right in the thick of it, building a family, or maybe, just maybe, you're starting to look ahead towards retirement? Really, figuring out where you are is the absolute first step to getting where you want to go. And here it is. This is the map for that journey. It's called the financial life cycle. As you can see, it breaks down our lives into these 5 key stages. And what's really interesting is how our priorities totally shift over time. We go from worrying about education and landing a first job to suddenly thinking about mortgages and family. And then, before you know it, it's all about planning for the future and hopefully enjoying a really great retirement. Okay, so every journey needs some way to get you from point A to point B, right? A car, a train, whatever. In the world of finance, that fundamental vehicle, the thing that makes it all move, is money. But what is it, really? And why was inventing it such a game changer? Well, at its core, money does 3 absolutely crucial things that make our entire modern world tick. First, it's a medium of exchange, which is just a fancy way of saying we don't have to trade chickens for bread anymore. Second, it's a unit of account, so everything has a common value. We know what a coffee costs versus what a car costs. And third, and this is so important, it's a store of value. It lets us save up the value of our hard work today so we can actually use it tomorrow. And this slide just shows you what a massive leap that was. I mean, look at the left, bartering. Can you imagine trying to figure out how many chickens your house is worth? It's absurd. Now look at the right. That's the simplicity and the power of modern money. It's like a universal language that the whole global economy is built on. All right, so you've got a handle on what money is. Your first real practical step on this journey is probably opening a bank account. But banks do so much more than just babysit your cash. You can almost think of them as the great matchmakers of the financial world. This whole process, it's called financial intermediation. But really, it's simple. Banks are the matchmakers. They take thousands of small deposits from savers like you and me, pool all that money together into one giant pot, and then they lend it out in big chunks to people who want to do big things, like buy a house. It's a really simple idea, but man, it's powerful. So let's talk about one of those big things. The next huge milestone for a lot of us is buying a home. And that is an incredible achievement. But it also opens up a whole new world of financial responsibilities and risks that we really need to get our heads around. See, when you buy a house, you're almost certainly using a secured loan, what we call a mortgage. The house itself acts as security for the loan. That's why mortgage rates are way lower than, say, credit card rates. A credit card is an unsecured loan. It's based purely on your word, your promise to repay. That's a lot riskier for the lender, so it's more expensive for you. And as soon as you have people who depend on you and big debts like a mortgage, protection becomes absolutely essential. Think of these insurance products as a financial safety net. They're there to make sure that your family and everything you've worked for is safe and sound, even if the unexpected happens. It's all about protecting the life you're building. Okay, so our foundations are secure. It's time to start looking a bit further down the road. How do we actually make our money grow? To pay for big long-term goals like retirement? Well, this is where investing comes in, and it really all starts with 4 main ingredients. And here they are, the 4 fundamental building blocks of investing. Right at the bottom of the risk ladder, you've got cash. It's super safe, but it's not going to grow. A step up, you have bonds, which are basically loans you make to governments or big companies. A bit more risk, a bit more potential growth. Then there's property, a physical asset. And right at the top, you have shares, which give you a tiny piece of ownership in a company. That's where you find the highest potential for growth, but also the highest risk. The real trick to investing is just finding the right mix of these things for you. Now, for those of us in the UK, there's this fantastic tool to give your investments a real boost, the Individual Savings Account, or ISA. The best way to think about it is like a tax-free wrapper that you put around your investments. Any profits you make inside that ISA wrapper are totally shielded from UK income tax and capital gains tax. And trust me, over the long run, that can make a huge difference. So far, we've been pretty focused on your personal journey. But here's the thing. It doesn't just happen in a bubble. There's this whole system of markets and regulators out there making sure everything stays orderly and fair for everyone. You can think of them as the rules of the road. And this quote from Professor Llewellyn just nails why we need those rules. There's something called asymmetric information, which is basically a fancy way of saying that the big financial firms simply know way more than the average person. So regulators exist to level that playing field, to protect you, the consumer. Here in the UK, we have two main referees in charge of that protection. Think of the PRA as the ones who make sure the big banks and insurers themselves don't fall over, which protects the entire system. And then you have the FCA. They're focused on the actual gameplay, making sure those companies treat you fairly in all your day-to-day business. Wow, we've covered a lot of ground, haven't we? From the absolute basics of what money is, all the way up to the huge systems that govern it. We've laid out the map. And so the final question really just goes right back to you. Now that you're looking at your own map, what's your next move? What's the next step you're going to take?